Hey everybody, this is Richard. So in this video, I'm going to be doing a review of the performance the last 3 weeks of June. So it's going to cover week 3, week 4, and week 5 of June, which are, the dates on that is 6/12 through 7/2. So the fifth week had a little bit of crossover. But so in this video though, we're going to be covering all 3 of the weeks combined, and we'll be discussing the Phoenix algorithm. But with that out of the way, why don't we go ahead and do the risk disclosure. Alright, so as you know, trading futures does involve substantial risk of loss. It's not appropriate for all investors. Keep in mind that past performance is not indicative of future performance, and I am not a CTA. We're what's called a third-party developer, and we allow the algorithms to be traded under what's called a letter of direction. So all that means is that we don't directly control client accounts, but we do allow individuals to trade them using the auto execution brokers that support them. Alright, so this video will be a little bit quicker than some of the others because it's a little bit late. I wanted to do this one and then also the first week of July, but I wanted to close out the final 3 weeks of June before we do that. So here's a brief recap of what we did. In essence, as you know, the top left chart here is the 10-year note. The bottom left is the day trade, the Phoenix day trade algorithm, and then the one on the right is the momentum S&P, the primary S&P algorithm that we trade. Now, if you are using one of the legacy algorithms like the swing trader, then you know that you're trading the top left one and the one on the right. If you're using one of the another algorithm like the wave trader, then you're using this one up here plus the Geronimo version of this one. But there's a lot of overlap, but in this case, really what we're talking about is the Phoenix algorithm. So the overall grade that I gave it was a C+. We were profitable in these final 3 weeks of June. We had, on the 10-year, we got into the trade around the 14th of June, and then we are still in that trade, and it's actually up as of the end of the 2nd of July. It was up. We had a few winning trades on the day trade, and then we had about 10 different trades on the momentum S&P algo, and I'll talk about how each one of these did. So let me pull up a chart and we can look at those trades. Okay, so here's a chart of the 10-year note algorithm. And if I zoom out a little bit, you'll see the previous month. So here's that trade that we got into in April, and then at the kind of early June, we actually got out of that trade with a gain. I covered that in the previous video. Well, we actually did get right back in on the 14th of June. And so this is where we bought in, and as of the 2nd of July, it was actually up a little bit. Now on the day trade, and by the way, pretty much all algorithms or all systems that we offer, including the legacy ones, trade this same 10-year note algorithm. It's really a key part of what we do. This chart down here though, this is the day trade algorithm, the Phoenix day trade, and what you'll see is that we did have 3 trades. We had one on the 24th, and I'll go ahead and make this a little bit bigger. So we had one on the 24th right here where we bought into the strength at the open, and then we ended up closing out of this trade with a slight gain right up here. So it's pretty much a break-even trade, but technically it was a little profitable by a little bit. The next few days we didn't really have any trades. We came close to getting into this trade. Fortunately we didn't though, because it would have had a loss. But then if you look right in here, this is on the 1st of July we had a really nice trade. And then on the 2nd of July, we followed it up with an even better trade. But so this day trade algorithm continues to do incredibly well. We bought in at about 7:48, and that's Mountain Standard, so that'd be 9:48 Eastern. And we bought in at about 4,300, and then we ended up getting out with a real nice gain at about 4,309. So that's about a 10-point gain, which is about a $500 gain. So this was a really good trade for us. And then on the 2nd of July, we had a similar trade where we bought at the open 43.22 and got out up here at 43.41. So this was almost a 20-point gain, which is about $1,000. Now, if you're trading the Crusher or the Pro Trader, those two legacy algorithms, then you would have seen these three same trades, only those ones get out at the close. So but the results would have been real similar, in case you're wondering. So that kind of covers this day trade. So now let's briefly look at this S&P algorithm. This is the main algorithm that we have that trades the S&P. And so again, those three algos combined are what represent the Phoenix trading system. But you'll see right in here, we did have a winning trade on the 11th of June. But I guess I covered that in the last video, so let's look at this one. So on the 14th of June, we bought and then got out pretty quickly when the market spiked a bit. So we had a winning trade, so a good start to this third week of June. But then what happened is we did get stopped out here. We got stopped out of this trade, and then we had another stop out right here. So these three trades gave us a pretty bad week 3 with the Phoenix algo. Now what happened though is that the last 2 weeks of June, we actually did pretty good. We had a really nice trade here where we made up for, I believe we made up for either all of this loss or close to it, 42.16, 41.75. So we didn't quite make all of it up, but it came real close though. And then we had a string of winners, but you'll notice these winners were pretty small winners, and so they weren't enough to make up for the losses that we saw over here. And that was why this algorithm struggled, even though the S&P was up, because of the way these stop outs occurred, and we didn't really have any good gaps work in our favor to help propel the earnings on this up move. Because of that, this algorithm actually was down in that 3-week period, even though the S&P was up. So that can happen, but it's not fun when it does. But in the end, there's not a lot we can do about it at this point. I will say though that in the next video I'm going to be talking about one of the updates that I'm making to this algorithm, and it's in response to some of this kind of thing that I've been noticing. But in particular, it's related to the S&P being at these higher levels in the 4,000 range as opposed to the 2,000 range when this algorithm was first coded. And so it's really just an adjustment based on that. But I'll talk about more about that in the next video that I do. But for now, yeah, this algorithm just kind of did okay. I mean, it was down when it really should have been up. So I'm being generous when I say that it did okay. I mean, it really underperformed by enough such that even though in this period we were up, I gave the combined system a C+ as opposed to like a B or an A. Really, it's because of this algorithm that struggled. This one did amazing. I mean, this one clearly got an A. It did exactly what it's designed to do, and that's certainly encouraging to see these kind of pops that it's able to grab onto them. The 10-year also outperformed, so it did really good considering the S&P was down. Fortunately, we had the 10-year rally with it, and that happens against us and it happens for us. Here's a case where it happened in our favor. But at some point, I do expect the 10-year to start trading more inverse to the S&P again. But I think that's the main thing I wanted to cover for this video. Just the overall performance for the last 3 weeks of June. And then we'll look at how we did in July in that first week. But thanks again for watching. If you have any questions at all, don't hesitate to reach out. Just remember, there is risk in trading futures. It's not appropriate for all investors. And of course, the past performance is not indicative of the future performance. So thanks again and have a great day. Bye-bye.